The banking sector has drawn the world spotlight, but for all the wrong reasons. But there's a slight reprieve today. Silicon Valley Bank deal lifts bank shares and the SP 500 ends up slightly. We're seeing regional lenders jump after the Silicon Valley Bank deal. That's where First Citizens agreed to buy large parts of Silicon Valley Bank. Banking sector woes are being felt all around the world. This problem has been brewing for years, but Eurozone banks cut lending even before the latest financial turmoil. Slower lending goes hand in hand with higher rates. Talking about higher rates, the Bank of Mexico seen hiking key rate by 25 basis points on Thursday. It's doing its 15th rate hike in a row, up to 11.25%. The pressure of higher rates is being felt all around the world. US banking concerns shift from crisis to growth woes. Following the collapse of Silicon Valley Bank on March the 10th, the Federal Reserve released data on Friday showing that deposits held by small US banks dropped by a record $119 billion. One key thing that we're keeping our eye on are credit spreads. This is the risk inside the financial system, and we can see that risk is growing. One thing to keep in mind, a lot of people are talking about recession. When you look at US oil, if US oil starts to dive down, that is a warning signal. US oil is below a level of resistance at the moment. We're going to keep our eye on oil. One thing that we also need to keep our eye on is the European banking sector. We can see the Credit Suisse has been under a lot of pressure for a long time, and it doesn't look like it's getting any better. The banks are scrambling for depositors because they've got massive holes inside their balance sheets. When we look at inverse credit risk, it can give us a reasonable signal on market turning points. We can see inverse credit risk lost its support and it's resumed its downtrend. This is something to be aware of. In response to the banking crisis, what have central banks done, especially the US central bank? It's flooded the banking system with money. Why has it flooded the system with money? Basically because the banking system needs to cover depositors' requests for withdrawals. But there's still a massive problem. When we look at insured and uninsured bank deposits, there's an $8 trillion gap between the two. This is fueling a flight to safety and risk diversification inside financial markets. Fortunately, the SP 500 is still holding up quite well. We saw continued bullish momentum, but there's a lot of rejection by sellers. The sellers are seeking to push the price down, and with so many global woes, it's little wonder. But we know through the CTKS method that there's rock-solid support in the SP 500 from 3878 to 3939. If this support is violated, it could be a disastrous move down, so I would suggest you prepare yourself. There's a big difference between bull markets and how people think bull markets actually result. And the same thing is with bear markets. Bitcoin is a leading risk indicator for the stock market. We saw yesterday that a lot of shorts piled into crypto and especially into Bitcoin as the longs were exiting the building. We also know through the CTKS method that Bitcoin was at a key level of resistance. Bitcoin is currently trading at $27,120. As professionals, we have three-dimensional thinking. We know what we will do with a specific trade or investment and our entire portfolio as well. Under three conditions: prices going up, prices going nowhere, and prices going down. We're always prepared. We don't wait till a crisis occurs. We've already made our decisions and we know how to act. What we can see is Bitcoin was struggling to get above this smart money sell level in between 27,843 and 28,379. It just didn't make it. So where was price caught? it was caught by another smart money buy level between 26,621 and 26,697. We've seen this time and time again with the CTKS method. It shows you where the roof is in terms of price action, but also shows you where the safety nets are. As professionals, we look broadly. If the SP 500 continues to go up despite selling pressure, and that can happen, we would expect Bitcoin to get through that 28,500 resistance level and make its way up to the next resistance level, which is 29,930 to 30,221. But we're also prepared for price to go just flat, just go horizontal, waver around the 26,950 to the 27,366 mark. And also prepared if price comes down to retest around the 25,790 mark. Being prepared like this makes you certain on what you will do if different price eventualities actually occur. Bitcoin was actually created in response to the global financial crisis. In the GFC, the banks went hardcore lending out to people who simply couldn't afford the money. This created systemic risk inside the banking system. The bankers very cleverly hid the toxic loans amongst high-quality loans, but when everybody found out, the entire banking system collapsed down, wiping out common people in the process. Hence, Bitcoin was born to be your own bank. The banking system is incredibly integral to an economic system. Losing trust in the banks is a recipe for disaster for the governments. The government cannot afford people to transfer their money, and we know there's an $8 trillion uninsured hole in the US banking system. We saw in yesterday's episode that if just 50% of depositors just cashed out of banks, nearly 200 banks would fail. They would burn. They would go down. The response to this by governments is to sue everything crypto-related. Why? Because they need to stop money from exiting the system. Governments are protectionist by nature. They seek to protect existing industries. Because those existing industries pay taxes, they have employees. Employees pay taxes. Innovations are a little bit different. They may create employment and growth, but maybe again, maybe not. What we saw in the crypto industry in the past 24 hours or the past 48 hours, a big drop off in Bitcoin longs and a starting point for the shorts to come back into the market. There's been $145.08 million in total liquidations across the past 24 hours, across 51,327 positions. And if you don't want to get liquidated, there's one surefire way to do it: trade at spot. That's what we do inside our global family. And thank you so much for the very kind comments in yesterday's video. Just beautiful. If we look at total liquidations across the past 24 hours, we can see about 79% of those were long. What about the past 12 hours? Increasing 83% long. What about the past 4 hours? Starting to decrease, say 72% long. And in the past hour, 55% short. One thing to keep in mind, as a student of financial markets, and that's what you are if you're investing or you're trading, just remember, when there's a sure thing, there isn't a sure thing. We can see in the past 24 hours, the longs have been disproportionately whacked around the head. They've been getting the liquidations. Yesterday, it was the shorts. Today, it is the longs. The longs and shorts just take it in turns, whacking each other. If you've been doing the CTKS method, you can see that there's a lot of resistance up around that peak of around 28,000 and prices being pushed below. Remember the fake out until the breakout. This is not necessarily over. We have to watch price action. So far on the CTKS risk indicator, we're not getting a dramatic fall off in the risk indicator, which can typically point to negative price momentum. So we're not seeing that just at the moment. We've been keeping our eye on a flight to safety, which is gold. Bitcoin is another flight to safety. Gold is more inversely related to the SP 500, and gold loves bad news. Wars, famines, supply shocks, pandemics, banking collapses. Gold just thrives on those things. We can see that Bitcoin is very different to gold. It's much, much more positive. One thing that we observe with gold's price behavior, especially recently, it's very closely directionally correlated with the inverse S&P 500. And you can see when the inverse S&P 500 came down, that means the real S&P 500 went up. Gold came down. And what about the inversion? How's it playing out now? Quite well. We can see with the CTKS method applied, gold currently trading at 1957 is stuck in a smart money sell area between 1952 and 1959. Professionals look at a lot of charts before making a buy or sell decision, and when we look at inverse Bitcoin against gold, you can see that it's more closely mirroring the inverse S&P 500. And that's what we saw on the previous chart. This is why you find a lot of people in gold love to bash Bitcoin. Why? They want gold to go up. This association doesn't always hold, just bear that in mind. Also, we need to keep our eye on the DXY. The DXY, when we look at it like this, just naked price action, we realistically don't know where the smart money sell levels and smart money buy levels are. So let's turn on the CTKS method. The DXY is currently 102.834. We can see it's below a smart money sell level from 102.991 to 103.178. It's also above a smart money buy area from 102.619 to 102.768. I mentioned before that these smart money sell levels act like ceilings. Yes, it can go through the ceiling, but it's a ceiling or a roof nonetheless, and it seeks to contain price action. What you will actually see, price tends to ping pong between smart money sell levels and smart money buy levels. Smart money sell levels, smart money buy levels. Just keep this in mind, but always have your three-dimensional thinking. Doing your daily three-dimensional risk management is incredibly important. Don't do what Silicon Valley Bank did and don't have any risk management. You need to know what you will do if price goes up, goes down, or goes nowhere. That's not just with a specific trade, that's your entire portfolio. Remember, you control your trade or investment, but the market controls the return. And your returns are based on your active learning, your knowledge, and your courage. The markets penalize blame and gambling. This three-dimensional thinking also applies in business, and it applies in life. It's a magnificent skill to have. And congratulations to each and every person that does this three-dimensional risk management each and every day. You're awesome. Gaining an understanding of how different charts relate to each other is very important for you to do. When we look at the DXY and compare it with the inverse S&P 500, we can see directional correlation. A lot of people get confused. What is directional correlation? It's pretty simple actually. Just think about it in terms of this. On average, you start with that word, on average, which means not every time. On average, when one thing goes up, another thing goes up, but it could have lags in it. What we seek to do as professional traders is time the market. The more probabilities that we can layer in, the more things that we can look at, the better we will be. That's why it's a completely different mindset to trade rather than invest. And we know all investors become traders anytime they buy or sell. Every investor should learn how to trade. When we look at Tesla, Tesla has held up very, very well. But where are the smart money buy and smart money sell levels? We need the CTKS method to determine where they are, and we can see Tesla closed at 191.84, and it's literally stuck just on the edge of a smart money now buy area from 190.47 to 192.18. If the SP 500 and note if Bitcoin all start to rally, we would expect Tesla to challenge the 206.37 to 208.04 levels. If it goes the other way and the SP 500 breaks down from its support, and Bitcoin could be leading that action in terms of risk-off sentiment. That's why we need to pay close attention to Bitcoin. We could see Tesla challenge the 171.02 to 172.56 mark. As professionals, we are prepared for all three eventualities. We never decide under panic because we've already decided ahead of time. The CTKS method is exclusively taught inside the CryptoTradingKS Masterclass, which is a premium Rolls-Royce level masterclass devoted to the CTKS method. Someone you know very kindly offered a CTKS partial masterclass scholarship. If you're interested in getting into the masterclass, please follow the links in the description of this video. Apple is an incredibly important firm, and many thanks to all the people who reached out and said, "Ken, can you please do this particular analysis for me?" I really appreciate people letting me know what helps them. Apple closed 158.30 cents. But where is smart money interplaying inside Apple's market structure? To answer this question, we use the CTKS method. We can see that Apple's price is on a smart money buy area between 156.44 and 158.38, but it's below an area of strong resistance between 161.51 and 165.94. The next smart money buy area is between 144.64 and 148.15. Apple is a very good indicator of where the SP 500 may go, and when we look at the SP 500, it often is just moving in advance of Apple, so this can give you some insight if you're an Apple investor or trader. You can see clearly the directional correlation is there. That's why if we understand that Apple is below a strong level of resistance, this can help us understand what's going on inside market indices. And you really do need to know. You can already see that the S&P 500 is throwing a negative signal on Apple, but Apple has smart money structural support. This is where market structure can override things, and we've seen that with the S&P 500 itself. It's on rock solid support, but if that rock solid support gets cracked, make your decisions. If you're a stock market trader or investor, you must look at Bitcoin. Why? Because Bitcoin throws some very powerful signals. For example, let's have a look at Apple and the intercorrelation between Apple and Bitcoin. Bitcoin was starting to come down even though Apple and we know the S&P 500 were coming up. What was this telling us? This was telling us that there was negative risk sentiment inside the market. Bitcoin is a very powerful leading indicator. What then happened to Apple and happened to the S&P 500? As Bitcoin was coming down, it was saying, "Hey guys, follow me." And they did. What about when Bitcoin took off? What happened to Apple? What happened to the S&P 500? We know the answer to that question. It took off as well. Understanding risk on and risk off sentiment is your best friend in terms of trading and investing. As a trader, you need as much timing information as you can possibly get. You always want to be stacking probabilities. Let's just do a quick run through on crypto news headlines. The CFTC calls ETH a commodity. That's Ethereum, a commodity in a Binance suit, highlighting the complexity of the classification. Binance has joined the long list of crypto companies being sued by US government regulators. Binance sued by CFTC over evading US rules. The CFTC allegedly said that the crypto exchange operators offered unregistered futures options contracts to US traders. But hang on a sec, didn't the SEC just authorize so many futures inside the crypto market? What is the CFTC mad about? Should Binance sue the SEC over misrepresentation? Ted Cruz and Ron DeSantis take on the digital dollar. Two lawmakers in 1 week weighed in against the possibility of a US central bank digital currency. It's not a possibility, it's an absolute certainty. Why is that? Because the financial system is broken. There is not enough paper to go around. The majority of transactions are now digital anyway. Please let me know in the comments what percentage of your transactions are done digitally. For me, it's around 98%. Please let me know what are your kind of percentages. Before the massive amount of stimulus back in 2020, the Visual Capitalist did this particular article. Right back then, before the money printer went absolutely insane, only 7% of the money supply was physical. You can imagine if 100% of people say, I want my cash, I want my notes, I want to hold my money. They just can't do it. It's impossible. That's why a central bank digital currency is an absolute requirement, and that's why all the central banks are examining it. Traditional finance fears drive digital asset investment inflows to 160 million. This is the largest since July of 2022. This is realistically only the start. If people understand how risky the banking system actually is, we're going to see a lot more flows, a lot more inflows into the crypto market. Of course, the regulators are going bananas trying to stop anybody from actually getting into crypto by playing mind war games. They have to protect the banking system. But there are 8 trillion reasons for people to diversify. What are those 8 trillion reasons? The gap between insured and uninsured deposits. If a bank collapses and you have uninsured deposits, guess what? The money just evaporated. If you have uninsured deposits, why wouldn't you, just as a pure risk management strategy, diversify into gold, Bitcoin, and potentially some top-level crypto? We saw recently that Justin Sun was sued. Now Binance and CZ are being sued by the CFTC over regulatory violations. In response, crypto exchange Binance launches new regional hub in Georgia. Binance's influence is growing globally. Meanwhile, the regulated Nasdaq exchange is eyeing a Q2 2023 release for Bitcoin and crypto custody platform. Hang on a second. How fascinating. When you look at the news, SEC plans lawsuit against Coinbase and banks stepping up to serve crypto firms after Signature Bank and Silvergate blow up. You can see all the US regulators are doing, in fact all the government regulators are doing, is just protectionism. They're just protecting the banking system. After all, they tax it. Therefore, they control it. We can see 2 types of news stories. Those in the crypto industry getting sued by government regulators, and those particular firms under government regulation already expanding into crypto. Talk about a mixed message. The banking crisis pushed over $286 billion into money market funds in just 2 weeks. Looking at crypto without looking at the main markets is very, very dangerous. You'll get caught off guard and you'll say, what happened? The main markets happened. Everything is intercorrelated and interconnected. Through the CTKS method, we have a very specific way of looking at price action, especially market action. When you look at Bitcoin's price momentum, we know where the smart money buy and sell levels are, but this is more about pattern recognition. This blue line is Bitcoin's gravity. This is Ethereum. Notice how the directional correlation between Bitcoin and Ethereum plays out. Also, BNB playing out very, very strongly. What about XRP? This is looking interesting. We've got some divergence here, some inversion. Whilst Bitcoin came down, XRP went up, and it's been doing really well. Looking at ADA, we can see ADA following Bitcoin's gravity and Matic also following. There are 23,061 different cryptos in the crypto market. We can see XRP has done particularly well, and Doge booted out Matic. Over the past 24 hours, the greatest gainers top 100, Flare, XRP, GMX, Neo, FEI, Stellar, Maker, and OKB. The greatest losers past 24 hours, top 100, Stacks, Mina, AGIX, ARB, Optimism, CFX, Conflux, Phantom, and Immutable X. Let's have a quick look at ADA. If we look at ADA's price chart like this, without the CTKS method, we don't know where smart money is stepping in to buy and stepping out to sell. Looking through the lens of the CTKS method gives so much confidence. You know where price is likely to reverse from, likely to hit, but it can take some time to get there. It doesn't just ping pong between a smart money sell level and a smart money buy level unless there's a degree of panic inside the market. ADA is currently trading at 345. That's 0.345. We can see it was rejected from that smart money ceiling. That ceiling is a sell level from 377 to 384. ADA does have major resistance from 439 to 465. ADA also has a bucket of support between 281 and 307. A lot of people inside the crypto market say, I don't care about the stock market. The crypto market is decorrelated from the stock market. It is not so. After more than 30 years inside financial markets, when people first start off, they have very simplistic views on how markets operate. But going after decade after decade after decade, you start to see that all markets are intercorrelated and interconnected. Here, we're looking at the SP 500, just the normal one, and looking at how it actually maps out against ADA's price. You can already see the directional correlation. If you're an ADA investor and you're not looking at the SP 500, you're making a mistake. And if you're an investor or trader inside the stock market and you're not looking at crypto, likewise, you're making a mistake. One thing to note, you may see these just flat line areas, these connecting of the dots areas. They are weekends. The SP 500 does not trade on the weekend. It's very, very slack. We've seen XRP do very well recently, but where are the smart money buy and sell levels? And how does this relate, this price momentum relate to the main stock market? When looking at the S&P 500, as the S&P 500 was coming up, we know what happens to Bitcoin, and we know no alt can escape Bitcoin's gravity. Look at what happened to XRP. When the S&P 500 sold down, what happened to XRP? When it recovered, XRP recovered. When it went down, XRP went down. Then it hit the weekend session, and XRP was showing positive momentum. Then when the markets opened, the S&P 500 was giving directional bias, the directional magnitude or directional position of where XRP was going. If you're in crypto and don't look at the stock market, you can see that's a mistake, and it's an easy one to rectify. When looking at the CTKS method, it will give us the ceilings and the floors where price could bounce from and bounce to. Not all levels are equally weighted, and you'll know that when you go through the CTKS method. XRP is currently trading at 47.86. That's 0.4786. It has a very strong smart money buy level from 43.44 to 44.38. I remember talking to everybody about that particular level as XRP just shot to the moon. It had so much upward resistance, it needed to retrace to digest all of that selling activity. And we can see that it gravitated around that smart money buy area. That would have been a good area to get in, even a little bit below, because we know when price shoots up, it often overshoots a support level. They're just kind of like safety nets. So when we see XRP just bumping up against this smart money buy area, where is it headed to next? The next smart money sell area, which is probably the strongest just at the present time, is around the 50-cent mark. Always have your three-dimensional thinking occurring. As XRP's price was just rocketing up to the moon, I was just talking to the community and saying be a little bit careful because there's so much resistance that XRP has blown through. It will need time to digest, and that's actually what occurred. And this is normal. This is not crystal ball kind of stuff. When you have a lot of overhead resistance and you blast through it, you're actually liquidating shorts. That's what this is. It's a panic of the short sellers saying, oh no, I just got stopped out. I need to cover. And when they finally regain their composure, they start to short again. So just bear these things in mind. And of course, the buyers, seeing price come down, want to start selling, so that can fuel an implosion in price. Price is always exploding and imploding inside the crypto market. That's why I invented the CTKS method, and we acid test this method 7 days a week, 365 days a year. I'd like to thank everybody for their fantastic comments in the past couple of videos. I'm going to have a change in times. I'm going to start doing these videos a little bit later on in the day. I just want to give you a heads up on that. So if you don't see me posting a morning video or a video around this time, no matter where you are in the world, it's coming. It's just coming a little bit later on. Watching to this part in the video means that you're really serious about your active learning. You're dedicated and committed. So I know who you are. Please be really creative in the comments and just put something about dedication or commitment, something about winning or learning, and never blaming in the comments. That way I know that you've made it to this point, and I'm really, really proud of you. Have a great day or night ahead, my friend, and Kate and I look forward to catching up with you tomorrow. Bye for now.